Hi guys, welcome back to the Daily Forex. In today's video, I'm going to share with you guys, a strategy that you can use to trade boom and crash indices successfully. Alright, now you can use this strategy to trade the candles and also catch the spikes. Okay, but when you're trading the candles, it works mostly on the high time frame, like the 15-minute time frame. Okay, like the 15-minute time frame, the 5-minute time frame. Okay, but it works best on the 15-minute time frame. Right now, I'm going to show you the parameters for this strategy. Currently, what I'm using right here is average directional movement index, envelopes, and moving average. Okay, so now on the average directional movement index, you set the period to 92. The levels you put 100, 90, 20, and 10. All right, then for the style, you put that on 3 pixels with the color black. Okay, if you're using the white background, you want to set the color to black. All right, then you put this first trend line here, then you click on done. Okay, then you set it to all time frames. Then if you take a look at this point right here where it says style, you put that on 1 pixel color white with this first trend line here, then plus di, you put that on 3 pixels color white, minus di 3 pixel color white with this first trend line. You click on done. All right, now you can see, then put in the envelopes. Okay, you put in the envelopes, period 10, shift 0, deviation 0.002. For method, you put that to simple while you apply to close. All right, then for the upper band, you want to put that on 3 pixel color blue, lower band 3 pixel color blue with this first trade line for both of them. Okay, then you don't add any levels. All right, you just click on done. Then the last indicator is going to be the moving average. The moving average, you set that to period 1, shift is going to be 0, method simple, then you apply to typical price. All right, you don't add any levels at this very point. Then you put the style to 3 pixel color white with this first trend line. Now you click on done. So currently right now, as you can see, we're on boom montage index. Okay, now how do you trade this? How do you trade the candles? Okay, now you want to make sure that you go to the high time frame, like the 15-minute time frame. You go to the 15-minute time frame at this very point, then you take a look at this point. Okay, you zoom in a little bit. All right, you can take 2 zoom or 3 zoom level. Now if you take a look at the 1-minute time frame, okay, on the 1-minute time frame, we have 100 level at this point here. We also have level 90, we have 20, and we have 10. All right, 100, 90, and 20 and 10. You can see 4 levels at that very point. But if you go over to the 15-minute time frame, you will not see the 100 and the 90, right? But you already know where it is because it is at this point. So call here is 90, probably here is 100, right? So as you can see right here, we have 2 lines, red and blue. The red line is the moving average. The blue lines is the envelope. Okay, the envelope lines. All right, now at this point, when the moving average crosses above the level of 90, at the same time the blue line, which is the envelope, crosses above the level of 90, between almost at the level of 100, right, but just above the level of 90. At that very point, you're going for a sell on boom. That is when you are trading the candles. You can see that it was at this point when it went to the overbought region. At this very point here, you can see that from this moment here, the first was a spike, right, and that spike took the moving average upwards at that very point. So above the level 90, the envelopes, 2 lines above the level 90 as well, you place your sell. You mark it here, you place your sell. All right, at this point here, then when you place your sell at that very point, you can see from that moment there, the market began to sell. All right, you scalp the market. Okay, you can see from that point it start to sell. Very long candle. Okay, and you can imagine the amount of profit at that very point, right? When you are trading the candles on boom market. All right, on boom market. Now take a look at this point as well. The moving average crosses above level 90 at this very point. Why the blue line of the envelopes is at the level 90, touching it. here above, at the level 90 above, touching it, you sell. All right, you sell. And when you're selling, you don't even need to be on the market for a very long period of time. You can even place your sell on the higher time frame, like a 15-minute time frame. Then you go to the 1-minute time frame. All right, you go to the 1-minute time frame and see how long the candle is selling for. All right, you can see how long the candle is selling for. Go back to the 15-minute time frame and you place your entry. All right, you place your entry. Remember that you can use third zoom level. You can use that as the best level for you to use when you're trading, with this type of strategy. Very perfect, very easy strategy. It's not really that difficult, to understand. Take a look from this point here. This is between the level 100 and the level 90 at this point. All right. The level 90 and the level 100 here at the very point. All right. And at this point too, this is where you go in for your sell, and the market would sell from that point. When price, which is the moving average and the envelope lines, crosses above this level 90 or touch the level 90, there's a spike and you sell the market. All right, you sell the market, and before you sell, you want to make sure that you have enough capital to carry out this trade. All right, you want to make sure that your account, your equity is able to, hold on to the market stability. All right, because the market might sell and to buy again, but it's still going to sell, right? Because that's the signal. And if you take a look here, the market sold and it bought at this very point here. All right, now the market can sell up to this point and buy again, but it will still sell, right? So you want to make sure that you have that, enough equity to hold on to that market stability, all right? So that you don't end up blowing up your account. And you want to make sure that you apply, good and proper risk management, okay? So this is, a 95% accuracy strategy, all right? A 95% accuracy strategy. Now, how do you use this strategy to catch spike? How do you use it to catch spike? Now, this is, remember, we talk about the selling. Now we're going to talk about the buying part of it. Now, when you're talking about the buying part of it, this is where you go back to the 1-minute time frame, because it's only on the 1-minute time frame you want to use to catch your spikes. You don't want to catch spikes on the higher time frame. All right, you won't be able to get that accuracy. Now, how do you catch spike on your 1-minute time frame using this setup? Now, if you take a look here, immediately this line, the moving average and the envelope, crosses below level 20 at this very point and also crosses below level 10 here. That's when you go in for your buy. All right, you go in for your buy, and immediately after that point, you can wait after 5 candles from that point in time before you place your buy. Okay, just like when it's sold below this very point, then you wait, you count 5 candles before you place your buy. All right, at this point already, this region here already indicates the oversold. All right, this region here already indicates the oversold position. All right, because at this point here, this is when price will begin to buy. So you immediately, after you count the 5 candles, you place your buy. You place your buy at that very point. The spike came through. You can see this is the first spike at this very point in time. All right, at this very point in time, this was the first spike that came through. Then it sold again and there was a buy and there was another buy, and there's still going to be another buy again because price is towards this point here at the oversold. So the market will buy for a certain amount of time. All right, then you also want to make another confirmation on the higher time frame, like the 1 hour time frame. Now take a look on the 1 hour time frame here. The market had bought for a very long period of time from this point in time, and the market also sold for almost the same amount of time, right? It's sold. Now the market have sold for a very long period of time without any significant breakout of a buy. Now when the breakout happened, you see that there was a breakout here for a buy. So now the market began to buy. Now the market might buy up to this point here. The market can buy up to this point here and reverse for a sell. This is why you don't need to stay in the market for too long when you're catching the type of spikes. Although when you're catching the spike, once the spike came through, you can either wait after 5 candlesticks for another spike to come. But if the spike does not come, then you just, take the profit from that point in time and you exit the market. All right. So you can see that with this, easy strategy on boom, 1000 index, is also a boom and crash strategy you can use to trade the crash market if you understand what you are doing. Okay, now you can see that this is a easy, setup and strategy for you to use to trade, the market. All right, on boom and crash indices, you can use it to trade the candles, you can use it to catch spike as well. All right, so guys, if you found value in this video, and I hope I really, wish that you found value. Okay, so if you found value, do it to like and subscribe to this channel, the Daily Forex. And also, guys, join my Telegram community, the Daily Forex on Telegram. On my Telegram community, I show you guys, tips, strategies. I give you guys free signals, on boom and crash indices, the volatility index, and the forex market as well. Okay, I show you guys tips and strategies on how to trade boom and crash indices. Okay, so if you found value, do it to like and follow me on my Telegram. All right, on my Telegram community and also TikTok community as well. All right, I'll see you guys on the next video.